And I'm glad to be here this afternoon to present to you alongside my colleague Jody Rash, who was one of the first investors in this space as well. He has joined the team in the last year or so, and I'll be pleased to introduce him in just a second. My name is Claire Smith, and I'm the founder of Beyond Impact, a venture capital fund formed in 2017, which launched its first fund in 2018, closed in 2020, that fund to investment. It made 23 investments, then did some co-investment while launching the second fund in 2022, which has 25 million currently, but is still raising to be over 100 million in what is a difficult fundraising environment, but we feel we have a very strong story and we look forward to presenting it to you today. Jody, do you want to just introduce yourself as well?
Yeah, sure. Thanks, Claire. So again, my name's Jody Rash. My background is over 40 years in international finance, both in corporate, in Fortune 500 companies in corporate treasury, as well as working, having my own company for about 15 years, doing everything from cash flow risk management to derivative analysis. My last position was at Moody's before I got into the venture capital world, where we developed non-financial ratings, basically social ratings. Once I left Moody's, I actually started a small venture firm called VegInvest. We were one of the first investors in this area to be exclusively looking at plant-based companies. Through that is where I met Claire. We were co-investing on a number of different companies. After running VegInvest for about 4 years, I retired from that, started doing some advisory work, including with Beyond Impact. And kind of middle of last year, Claire asked me if I would join them more permanently. So I've been a partner in that since somewhere around middle of last year.
Great, thank you, guys. Yeah, let's go ahead into the deck and carry on.
Perfect. Okay. So we're here to talk about our second fund from Beyond Impact, and we're very happy to have received a number of awards for Best ESG Fund in the environmental space, climate focused, and generally and as an environmental fund of the year global from a few of the leading magazines in private equity and environmental finance and wealth and finance. This is moving forward. There we are. So knowing that some of you may be short on time, I just wanted to hit some key points before we move into the main part of the presentation. So we have been investing in this area since 2017 across plant-based and alternative proteins and essentially what we call the future of food and materials. With now over 30 companies that we've invested in across pre-seed through to Series B, and having invested in some landmark deals and some of the earliest and leading sort of blue chip style of companies in this space. So having advised the first fund, we have gone on to the second fund. These are Luxembourg vehicles. And we also have a UK nominee structure for co-investments, but those vehicles can be invested in by US persons. The AFM, who is a regulated manager that we work with in Europe, has registered with the SEC, and we do provide PFIC statements for US investors for their tax declarations. So we have started investing our second fund. It's made 11 investments, having done the first close. year or so ago. We continue to fundraise for that fund with a target of 120 million. And we do consider we have one of the strongest investment teams, possibly the strongest, and I'll show you some competitor analysis in a moment. But we do actively support and engage with our portfolio companies. We have some board seats. We are a genuinely global team as well, with representation on the investment team in North America, Europe, Asia, and the Middle East. I think I worked out in total, we had 240 years across the team of investment experience. And especially some of that is in the specific space of food and materials, which I think few other firms can boast. I'll go into the specifics on the investment strategy and why it's such a big opportunity. But essentially, we are looking to invest in solutions that are superior, scalable, and sustainable across 4 market segments, which are around protein replacement using various different technologies, ingredients, enablers, and capacity builders in order to build up the space and improve the products. Cruelty-free products and animal testing alternatives, which is a small element, but it covers the consumer product side, which is non-food based, and then a second non-food area, which is alternative bio-based materials. So sustainable alternatives to products such as leather, but which are not using plastic. And important to us is that the companies should have a strong IP, so ideally a moat, which is a barrier to entry for others, and means that their product is more sort of essential and protected when they sell it in the market. For those that are oriented towards impact and creating a positive impact with your assets, we do count ourselves as a climate fund, a climate and biodiversity fund. Why? Because our products that the companies are making, those products are generally are all actually far less resource intensive than the products that they replace. And the products that they're replacing are primarily those which are derived from animals. So we tick a lot of boxes in terms of climate mitigation, the oceans, biodiversity, and climate adaptation through the shift of consumption and the shift of production towards those products. So just some more bullet points in terms of the fund. As I said, we are aiming for 120 million in terms of the fund size, and we have the rest of this year in order to reach that fund size. We are investing in companies from pre-Series A to Series B in the main, with tickets from 1 to 10 million, with the 10 million being built up over a period of 2 to 3 years in terms of the size of that, the position in the companies. The future of food and materials is the sector. So we are going across certain sectors, but the common theme is obviously the replacement of the animal-derived products. We do aim for gender and racial diversity, and we are genuinely a global team and a global portfolio with, I would say broadly, 30 to 40% in North America and Europe, and then the rest in Asia. What's important is we have also, alongside this fund, built a technology platform that enables us to capture deal flow, but also to promote and offer that deal flow to investors. So if you were a fund investor, potential LP, obviously we're delighted to meet you, but also if you do direct deals, we can offer deal flow as well. And finally, on the impact side, we are compliant with a specific EU regulation on environmental impact, environmental and social impact, which is called an Article 9 fund, which very few funds are able to comply with. It basically means that all of your investments have to have some positive impact. I said I would touch upon these elements, these areas where we're investing, but primarily in order to highlight how enormous these markets are. There is a 1.5 trillion market in animal proteins. The ingredients market is more than 200 billion, and the shift of consumption away from meat towards these alternatives is actually increasing the number of ingredients that need to be available. So that ingredient market is growing as this space grows. In cruelty-free products, you've got 500 billion, and animal testing, 25 billion. And in materials, 100 billion of animal-derived materials. And then obviously the products that are made from those materials. So we can invest in a very large market, which is in existence and is ripe for disruption. Why? Because it's so incredibly inefficient to be making products from animals, and the products that we're investing in are superior, scalable, and sustainable, and they are ultimately cheaper to make once the companies have sufficient scale.
Claire, can we,
These,
if
yes.
it's okay, I don't know, you might have a slide about it later, but can we talk a little bit more about the tech platform at some point?
Yes, we will. It does come at the end, but I will try and make sure that we get to it fairly speedily.
Great, thank you.
So just to back up the comments that I was making about the size of the market, it is a huge market for animal-derived products, and we came to the view, myself, Jody, and other investors that started in this area in the period of, say, 2015, 16, 17, came to the view that this was potentially a very large market just because of the size of the meat market that was out there and the efficiencies that could be created by making these products. But since then, other people have come to the same view, and you can see the charts on the right from A.T. Kearney and from the Boston Consulting Group. Both of these are basically saying that there will be significant disruption to the industry, to the tune of 1 trillion by 2040 in terms of A.T. Kearney, and BCG sees the current market from alternative proteins growing by 8-fold in the next 11 years. And the reason for that is a number of market trends towards eating less meat, towards flexitarianism, towards less allergenic products, healthier products, biomaterials. You maybe saw recently that Apple removed leather from its watch platform, and that's supported by demographic trends where the Gen Z and millennials are far more likely to be eating less meat than their older relatives. But besides the potential in terms of the market, it's very important to be investing in this area because of the environmental damage of the use of animals. And without getting on my soapbox here, there are some key crises in the environmental area and also in terms of food security, where hunger is definitely a risk, and an increasing risk. The water crisis is getting worse and worse in terms of access to water and clean water. Biodiversity depletion, there was obviously the global conference that took place at the end of last year that put in place a plan similar to the Paris Agreement around biodiversity that pretty much mandates no additional land being used for animal agriculture. And of course, the big one, the climate, and all of the solutions that we're investing in would emit far, far less than the animal products that they replace. So shifting to those presents a far lower greenhouse gas emission load than animal products. And that's, one of the reasons why we're doing it. What we have done, even though we started the fund in 2022 and we'd only made some 8 million of investments by the end of that year, we have actually worked out that even those investments have made a significant impact on various aspects, such as lower carbon emissions, both scope 1 and 2 and 3, so direct and indirect, lower waste generation, lower usage of fresh water, a reduction in land usage as well, and of course animal lives spared and animal suffering which is avoided, because not only do the animals who are producing the products, ultimately they're killed in order to yield those products, but they have a pretty horrible time of it in factory farms, which is where 99% of these animals are living for at least some part of their lives. And overall, none of our portfolio is invested in industries which are damaging, whereas 100% is invested in those is solving environmental issues. And there's a rather complicated slide here that I won't go into detail, but these are the numbers that we have come up with the support of a leading platform in terms of impact analysis called Impact Cube, and the numbers were generated by comparing our companies against the traditional product companies in meat and dairy, which are making exactly the same, the analogous products. So it is on a like-for-like basis. I said that we'd done some competitor analysis earlier in the day, because earlier in this this period, because we wanted to show that what we are doing is well worth looking at, because across various dimensions we have superior team, a tech platform, we have very high quality of deals, we have one of the longest track records. We are specialized in this area. We don't think it's realistic for climate funds to put a food vertical in alongside energy and infrastructure and all sorts of other things and really know and understand the place. So it's important to be a specialist, and our team are extremely experienced. And you can see on terms of those radar charts that we're towards the outer edge in most of those. The only one we're not at the outer edge is in stage, because we're not late stage, and that's the scale that we're using there. But compared to a broader range of funds, and also the more specific funds in the alternative protein space, we have kind of graded ourselves against the other funds, and we consider we come out pretty well across a number of those dimensions, as are listed below. And that's because of our team. So besides Jodie, who you've already met, and myself, who was the founder of Beyond Impact, and that was after a career in finance and investing of some 30 years or so, before I had started in this firm and this fund. And that experience was at leading investment banks like UBS, and then latterly with the largest and most well thought of, I would say, consulting firm in the alternative asset space. So I came out of there in 2017 and formed this company. So besides Jodie, we have people on the investment team such as Diane, who is poised to join with a slight uplift in assets. She is a food industry consultant and startup specialist who also has run her own food companies. Hannah, who also was COO at a food company before she joined us, but she also has 20 years of operational experience in program management at scale up at various energy and infrastructure companies. Sagar, who has spent his experience up until now in the investment sphere with a specialism in impact investment in Asia. And we're supported by others on the team who are partners and advisors. So the top three are advisors: Tyler, who is now working for a large growth equity fund in the food space; Catherine, who's running money for the Maryland government at TEDCO; and Greg Sutendijk, who left International Flavors and Fragrances a couple of years ago, now working as a consultant, and obviously he has top level experience in the food ingredients area. As venture partners, William and Anthony are integral to the team and are on every investor call that we have, investment call of the when we're doing our due diligence on the companies. Anthony has run billion-dollar portfolios for large family offices in Europe, and William is a former investment banker at board executive level in Switzerland, and he has been also involved in the last several years in food and agriculture company fundraisers. So we have good investment experience, but we also have a number of people on the team with very strong operational experience in the space. I'm highlighting a few companies, a number of companies that we've invested in for this second fund. So if you were to come into the fund, there is already a portfolio was partially built out. Our aim is, as we mentioned before, to have 30 investments ultimately across the space. What's key is to note that there are some high well-known names within this area, such as Geltor, such as Wicked Kitchen, which you may have seen as a US person on shelf going into Walmart, for example. But we also have a number of high-tech, sort of deep tech startups within the portfolio, such as Paleo, which is making a myoglobin to be used as an ingredient in plant-based meat in order to make it more savory and actually make it taste more like meat, the myoglobin being a component in blood which makes meat taste like meat. Those are some of the companies that we've already invested in for this fund. Across our two funds, there's a larger range of companies. You can see again some standout names like the Every company, which is making egg white, Blue Nalu, which is a West Coast company making fish from cells, so cultivating the fish, so creating fish without fish, but directly from fish cells. Gourmet, which is another one in France, working in the foie gras area. Mosammeat, who some of you may know, created the first cell-based burger in 2013. So the key takeaway here is we're not about plant-based brands, which, as some of you may know, have had a difficult time of it of late. But we are very much about those ingredients, high-tech ingredients that are going into those products that will make those products far more saleable, and those ingredients will be in demand from food manufacturers across the world in order to make those products. Just a few comments here about the first fund, which is obviously where we built the track record. We made 23 investments, as mentioned. Companies in that portfolio have gone on to raise over $1 billion. Some 70% have raised more than $1 million following our seed investment, so they have managed to progress. We were investors in unicorns such as Mosammeat, Geltor, Blue Nalu, and the Every company. And what's key to look at is the pie chart, which demonstrates that some 43.5% or over 40% of portfolio companies have seen a valuation increase since investment of more than 3 times. The standout being Supermeat, which last raised at 21 times the initial price that we invested at. And overall, that fund one has more than doubled in value since it closed.
Have there been any exits that are worth mentioning?
Yes, there've been a couple. They were relatively small companies, but one in 2020 where one company was taken over by a larger competitor and took on that company's brand name, and the other one actually did an IPO in 2021.
Do you expect the same type of results that one would expect in a tech type fund where companies will let entrepreneurs and founders fail, and then if they survive, they'll go ahead and buy them out because they can leverage their scale and balance sheet. Is that something you see happening here in this silo as well?
I think because of the size of the market, we do see the potential for the companies to perform, to perform very strongly because they have a very big market to address. It's a huge addressable market. In terms of letting founders fail, I don't know that there's a keenness amongst the venture capital companies in this area to let founders fail. But we have seen certainly some mergers occur within the space where a company and the founder hasn't necessarily matched the expectations of the investors, and that the investors have then said, okay, well, we're going to broker something within, again, with another company in the space so that they can actually make better use of what you've developed up until now. So we are seeing some consolidation in the space, which I think is a good thing.
Very healthy, yeah.
Yeah, and it means that, obviously the companies are fusing together and they can have some economies of scale and reduce their expenses or share those expenses, but in a way that net provides better gross margins and the chance to get to profitability more quickly. So that's a definite trend at the moment for some aggregation of companies, let's say.
Yeah. Jody, do you want to say something?
Yeah, just to add on to a little bit, I think the consolidation is one of the opportunities in the market, and actually one of the reasons why increasing the size of that fund would be very important, because that helps us control this the merger. And I think a lot of the companies that start up as one product companies, whereas now I think in the market having multiple products is important. And rather than having because I think you just have economies of scale, more efficiency, higher margins as a result of that. So being able to direct companies that have good products, combining with others that have gained certain amount of scale and can add on to their product line, is a very powerful story for a fund to be able to kind of control and help out the entrepreneurs to do that, to build, I think, more value for the investors.
Yeah, makes sense. Can we take a quick question here? Let's see if I can articulate it. How does the fact that the meat substitutions are made from an animal or fish cell affect the Gen Z and millennials who want plant-based? Are these companies targeting them or the meat-eating communities? Does that
That's a really great question, and Jody, you may want to come in on this as well. But yeah, I mean, we would agree that there are the Gen Z and millennial, there's a certain proportion of them that have gone kind of pure vegan, as it were, and they may not be attracted by these products, but it's still a very small minority of the population overall, and the much larger part of the population are those that are still eating meat. They're omnivores, and they are looking for healthier alternatives. They're looking to cut down their meat consumption, but potentially to have healthier alternatives, or because they're conscious of sustainability and those kind of issues. And these products in the cellular do check those boxes. The cellular products are not necessarily going to have all the disadvantages of the animal products in terms of from a health perspective, because they can be sort of designed in a way to have, for example, healthier fats. And from an environmental perspective, they do have less greenhouse gases, use of water, use of land, etc. Because you're growing cells, you're not growing a whole animal and then only using part of it for food and then throwing away or using in some other way, but in a way that is more a byproduct, the other bits and pieces of the animal which are not consumable. So I think even if the Gen Zs are not so attracted by it, or feel that they don't need it, there's a huge market out there that will be prepared to switch from meat to cellular product, whereas they wouldn't necessarily be interested in switching from meat to purely plant-based products. Jody?
Yeah, no, I would agree with that. I think to the extent that we have the Gen Z and they're switching more to vegan or totally plant-based products, I mean, we do invest in companies like that as well, because we find that as a growing market, not just for the Gen Z who want to be vegan, but people are just eating more of a mix. So you have the flexitarian market. And as far as the cellular ag goes, with the increased sensitivity to things like climate change, animal cruelty, and so on, to be able to have a alternative that's not even an alternative, that's actually biologically the same as meat, is very attractive to that group. And I think that's there's also a lot of opportunity as this goes on to be able to adjust things, like what are the different flavors that you want, fat content, protein content, so on. So you can actually have designer meats in the future. And one thing that I always thought was interesting is the people saying, well, how is Gen Z, or how are people going to react to what they call lab grown meats? And what I'm finding is, particularly the newer generations, the fact that things aren't grown up in the wild is actually attractive to them. I mean, I just remember my son, who's sort of that generation, when we planted stuff in our own garden, he wouldn't eat that because it had to come from a supermarket where it was super clean. So, that kind of philosophy of being against cell-based, I think, is not going to be as much of an issue, or I don't think it's going to actually be an issue at all going forward.
Yeah, and just to add to that, the cellular meat was deemed halal recently by the imams that determine those things for the Muslim population, and I believe that it was already deemed as kosher by the senior group of rabbis. And just thinking about those countries, we saw Saudi Arabia recently, an entity in Saudi Arabia, an economic area which the government has given a certain amount of money to build infrastructure and invest in suitable projects. They put money into Blue Nalu. Now, why are they doing that? There's a food security aspect there. You can't farm animals in the Middle East to any degree. Most of their meat is imported from elsewhere, and often this is live exports, which have their own issues. So these countries are investing in cellular meat as an answer to economic growth, but also food security. So it can be a solution in many ways, not just about replacing animals, but also in terms of feeding the country's population with less negative impacts.
Yeah, I think Bethel had another question, which I think is a really good question, that said, do you earmark investments so you can make a decision you want to go to vegan company versus non-vegan? And our philosophy is that we invest in vegan companies. Now, how you define that is the important part. I mean, I'm personally been a vegan for 17 years. Claire is also. So we're very sensitive to this issue that some of our companies, particularly the ones that do fermentation, they never use animal products to begin with. They take plant-based proteins, fats, whatever, and through fermentation, make it into biologically animal-based products. So animals are not being used in that process. For cultured meat, that's not the case, where they need to start with some animal cells, but they don't need to kill the animals, and most of them, the animal cells can be reproduced, so you don't need to keep on doing this process. So, it depends on, a lot of it is how you define vegan. If you define it as not harming animals and not using the animals in the process, that is our philosophy. If you mean that it doesn't have any animal protein in it at the end, well, that's, I think given the markets and trying to do the least harm to animals would be, in our mind, counterproductive, because you would be avoiding a major area that would tend to have very good both social and environmental impacts.
So that's super fascinating. And it's not just ideology in your case, because you're running a fund, right? So you want to make
Right.
money, right? So it's interesting. You've if you don't mind me bringing my son into the conversation, since you did, Jody, I
Or
learned a new term, flexitarian. Well, my son's an inflexitarian. Like he's got a vegan and with no wiggle room, but that doesn't mean he knows exactly what he's doing. But it's really interesting to see this. It's been something I've not paid much attention to, but this is super fascinating stuff, because there's people that pay attention to everything they eat, right?
yeah, yeah. But
Well, I think everybody should, but
yeah,
everybody should pay attention to what they're eating and try and have the healthiest diet possible. But we definitely feel that these products and the ingredients making these products are highly supportive to that, and not only to vegans. I think that's the point here.
Yeah, I think it's fascinating, and like my opinion doesn't really matter as it relates to how this is all playing out. We pay attention to what we eat, but we eat everything, right? And the thing that you said, Jody, about your son, it's interesting that he thought that whatever he got from the grocery store might be better than what you got from the backyard. Like that kind of doesn't add up to me. But again, I don't know what I'm talking
nor
about.
me.
I think that's very effective marketing by supermarkets.
Exactly.
But I mean, even something like that's not in the food area, which I think is a good example of all this, is a company like Emulate, which is a fascinating company, because what they basically do is organs on a chip. So here, the drug companies do animal testing. And the reason they do animal testing is because they're required, as of now, although that's changing, to do animal testing. But so I think it's something like 86% of all trials on animal tests fail in human tests, just because our biology is so different. So Emulate, which is not a vegan company particularly, but what they're doing is saying the best thing to do is to test drugs on human organs. So they grow human organs. They then test drugs for things like toxicity. They can even getting to the point of being able to test effectiveness and so on with that. And they show a higher effectiveness rate, which will save drug companies billions of dollars. And it's not like a vegan fringe that's looking at this. They've gotten a lot of non-dilutive money from places like DARPA.
Yeah.
So, these are the types of things that we look at. It's very exciting because it's not like investing in tofu. It's investing in, some of the latest technologies, both like what Emulate does, what the fermented products. So you're basically doing a lot of high tech investing as well within this, as
That's
well, supporting the core vegan products that there's also a growing demand for.
Yeah,
fascinating.
it's biotech without the kind of high risk element of investing in drug companies.
Has
Because
the
everybody needs to eat.
Yeah, right.
And the approval process for food products versus drugs is obviously, much lighter. And yeah, but there's definitely a deep tech element to it, including AI. In fact, if I must throw in the buzzword of the day, because a lot of these companies are generating proteins using AI in terms of understanding the process and the inputs to the process and optimizing that process. There's thousands and thousands of plants around the world, and they're using AI to understand the specific characteristics of plants and what might be the best plants for a particular process, for example.
Fascinating. I'm over my skis on the science of this, but I'm a investor in a company that's managed to replicate the human brain, not the entire the cell structure, so it can use do the testing like Emulate does on the cell structure, so it can, avoid all the the testing that would otherwise be done on animals. And they've also, like you said, Jody, got non-dilutive investment because it basically skips over all the business of using animals to test, which, as you've said, I learned also that most of that stuff doesn't pan out. It doesn't,
Right.
when you test it in humans after that, it doesn't really work, right? It's not,
Yeah.
it doesn't indicate that it actually is going to work in humans, to put it more clearly. Yeah.
That's right. And we're missing, and because of testing on animals, we may be missing some very effective drugs because they didn't work on an animal, but they might have worked on a human, but they never got to that stage in the process.
Well, even worse than that, if we tested on animals and we tested chocolate on dogs, we wouldn't be eating chocolate because it's poisonous to dogs.
Exactly.
But forget about
What a
all
shame.
that.
What a shame
Real
that would
simple
be.
example that everybody knows about, right?
Right.
Yeah. Yeah.
So,
Actually,
go
yeah.
ahead.
So
Go ahead.
should
Go ahead,
we
Claire.
continue? I was just going to give another example, which is one of the companies in the
Please.
portfolio, Geltor, actually synthesized a human collagen, without, taking samples from a human. And that human collagen is going into skincare products and proving to be very effective for those of us that are concerned about wrinkles. If I continue, I'll just get to the end and cover the platform which you also mentioned. This is just a sort of general slide about the benefits of diversity and also emerging managers. We would still be classed as an emerging manager on our second fund, and obviously in an area where relatively few managers are specialist, and emerging managers do have a tendency to outperform. Female-led and diverse investment managers similarly, and the statistics show that. And in addition to that, we've also been not prioritizing, but just generally creating a balanced portfolio in terms of the companies that we invest in and the composition of their senior team. So we have invested in female founders or founding teams, and also in the BIPOC area. As well in terms of those minorities. You mentioned, yes, so on the platform, so we call it our sourcing engine. So we're active in the market in terms of evaluating deals, but we kind of have a fire hose of deals that come to us because we have created a platform that companies that we've promoted very, very heavily, and companies can literally in 2 minutes fill in some brief details about their raise, upload their pitch deck, and tell us about their raise and give us enough information to be able to decide if it's could work for us or not. And the reason that they're doing that is not just because of Beyond Impact, but also because they are aware that other investors are on that platform as well. So we have built a platform that other venture capital firms and other investors can potentially tap into as well. And I mentioned the co-investments, etc., that we're offering. So that means that we are seeing something like 600 or 700 deals a year. The range of deals is relatively wide across the globe. You see 45% Europe, 34% North America, APAC 17%, and they are tending to come in our sweet spot. I would like to actually just look at those figures again in terms of the deal size, because we're actually seeing more and more firms coming to the platform with larger deals as the funding environment has got more difficult. It's been harder for companies that are going on to their next raise, the Series A, the Series B. The larger deals have been that much more difficult to accomplish, and so companies are coming to the platform for those, whereas in the past they might have thought, oh, we don't want to use a platform. And so continually we are diligencing companies with a particular focus at the moment. And you can see some of the names that we're looking at, and a couple of them have actually gone through our due diligence and are going to the investment committee. But particularly the ingredients, fungi based technology, which is not just about growing mushrooms, but things like mycelium, and mycoproteins, and also materials companies, because we see the materials space as being somewhere analogous to where the food area, the food tech area was some 5 years ago. It's been relatively underinvested in, but it's still a huge market, and with huge companies wanting to use those materials in order to improve their own sustainability scores. And obviously none of the issues in terms of approvals required for materials versus food, where obviously it has to be ingestible and it has to be safe. So the platform is available to investors who complete a short form in order to indicate the sort of size of tickets they are, the type of deals that they're interested in. And we're capturing that information and then comparing it against the deal flow that we're seeing. And that gives us, as a fund, a very good idea as to whether a company's fundraise will be successful, whether other investors are likely to be interested in it. It allows us to provide fundraising support because of the database that we've put together of relevant investors in this space, which is well over 10,000 now. That actually allows us to also support our portfolio companies by marketing their deals to other investors. So this downstream fundraising element, the last thing we want is to be invested in a company and then they can't accomplish their next raise. So we're providing them this support in a systematic fashion through a platform. And for investors that want to invest direct in certain companies in this area, but do need that additional due diligence support, we offer the co-investments as well. So they can be investing alongside us, getting the benefit of the interactions that we're having with the companies, interactions with the CEO, CFO, which they might not get as an investor if they were not investing through us.
Is the reason that you're starting to see the bigger companies come on optics, or was there a requirement to invest in the fund to get access to the co-investment on the platform companies?
Okay, so in terms of, is there a requirement to invest in the fund to get access to co-investments? The answer to that is no. But for co-investments, there's a fee associated with a co-investment. And for anybody who has gone into the fund, then that fee is halved, basically. We do a steep discount on that fee. And in terms of the companies, I'm sorry, I lost your question.
No, so you were saying some of the larger
oh yes.
Yeah.
Companies have come to the platform.
Yeah.
Yes, I think it's just endemic of the difficulty that companies are having in fundraising at the moment, which I mean, for an investor is kind of a good thing in a sense, because the terms are far more realistic than they were. A couple of years ago, things got very hyped in this area. In 2021, some investors maybe sort of nursing their wounds a little bit, but the long-term thesis and of this opportunity is still in place. You saw the forecasts in terms of where the future market is likely to be in this area, and so this is definitely a buying opportunity. It's a good opportunity to invest now when companies are not finding it so easy to attract funds. and definitely doing it through a platform where there's other significant investors that are involved is a very good way forward, because it's important not just which company you're investing in, but also who you're investing alongside.
Seriously important. Yeah.
So the final thing is just the terms of the fund, which, as I mentioned, it's a Luxembourg vehicle, but it is accessible to US investors. We have gone through the SEC registration and and provide all of the tax statements, etc., which is necessary for US tax. We will be continuing to invest for another couple of years in companies. The closing date in terms of putting in subscriptions to the fund is the rest of this year, but obviously we're keen to do another close in the next couple of months. And the key thing in terms of the fees is that there is two different levels. There is an institutional share class for above 5 million, which has slightly beneficial terms, and the standard share class is at the 1 million minimum. And in terms of management and performance fee, those are fairly typical numbers for venture capital arena. We do have a hurdle rate as well of 6% per annum in terms of then the carry being above that. So our target IRR is 30% net, and we're anticipating the average multiple to be 4 times across the portfolio in order to achieve those kind of numbers. The final slide is just a few testimonials from some of our companies that we've invested in, who've had some very kind words to say about us, about the platform, about our ethics, about our professionalism, and about the kind of insights and our understanding of the industry. So they definitely see us as a kind of a peer in terms of the discussions that they have with us.